Have you ever looked at the person in the lane next to you, the one in the brand new SUV, and thought, how do they afford that? Or maybe you've done the other thing, the thing almost nobody admits out loud. Lying in bed at 2 in the morning, staring at your bank app, wondering if your balance is actually normal for your age. Because in America, we are obsessed with normal. The normal house, the normal car, the normal vacation, the normal life. But here's the problem. Normal looks rich on the outside and broke behind the scenes. And today, I want to pull back the curtain. Not on fantasy money, not on millionaire influencer money, on normal money. What the average person earns, what the average household spends, what the average American has saved for retirement, and how much debt the average family is dragging around like an anchor. And I'm warning you now, some of these numbers are going to hit hard. For some people, this will be a wake-up call. For others, it'll be a roadmap, a blueprint for separating yourself from the crowd. Because in 2026, being normal with money is not the goal. It's the trap. Let's start with income. The median full-time worker in the United States earns about $1,000 a week, roughly $52,000 a year. At first, that sounds okay, respectable even. You think, I can make that work. Then reality shows up. Taxes, Social Security, Medicare, state taxes, depending on where you live. And suddenly, that $52,000 is not $52,000 anymore. It often turns into take-home pay closer to $35,000 to $40,000 a year. Now, stop right there, because this is where the story changes. The average household spends about $5,577 a month. That's more than $67,000 a year. So let's slow that down. If a worker is taking home around $40,000, but the average household is spending more than $67,000, what exactly is closing that gap? Debt, lifestyle inflation, 2 incomes stretched thin, buy now, pay later, credit cards. That's the part no one brags about on Instagram. And the biggest slices of the budget? Housing and transportation. Just keeping a roof over your head and a car in the driveway can cost around $2,700 every single month. Before groceries, before utilities, before insurance, before your phone bill. Before life even starts, your money is already gone. That's why so many people feel like they make decent money but never get ahead. Because normal spending is designed to keep you stuck in survival mode. You're not building wealth, you're buying time until next Friday. And if that sounds dramatic, this next part is worse. Let's talk about retirement. This is the number that should keep people up at night. Because almost everyone says they want to retire comfortably. But the average person's behavior tells a completely different story. For Americans aged 65 or older, the median retirement savings is about $88,000. Now, maybe that sounds like a decent chunk of money. $88,000 sounds serious. It sounds like something. Until you run the math. Using the 4% rule, a common rule of thumb in retirement planning, $88,000 produces only $3,500 a year. That is roughly $300 a month. $300. Think about that for a second. Could you live on $300 a month? Not thrive, not travel, not relax. Just live. That wouldn't cover most grocery bills. It definitely wouldn't cover healthcare. It wouldn't cover utilities in many places. And yet, that is the retirement reality for a huge number of people. So what do most people plan to do? Rely on Social Security. And Social Security matters. For many Americans, it is essential. The average monthly benefit is around $1,550. But let's be honest, that is not a dream retirement. That is not freedom. That is barely holding the lights on. Here's the part that gets even more uncomfortable. The average retirement age is about 61, but full Social Security benefits don't kick in until around age 67 for many workers. That leaves a gap, a dangerous gap. 6 years where people either keep working, dip into whatever savings they have, or face a cliff. So when people say, "I just want a normal retirement," what they often mean is this: work for 40 years, hope the market cooperates, hope Social Security stays strong, hope healthcare doesn't wreck the plan, and hope your money lasts longer than you do. That is not security. That is pressure with a smile on it. And if you're wondering why so many people never escape this cycle, here comes the silent killer: debt. More specifically, credit card debt. The average household is carrying more than $9,000 in credit card debt. And usually it's not because of one giant emergency. It's death by 1,000 swipes. A dinner here, new clothes there, a weekend trip, a few impulse buys, subscriptions nobody remembers signing up for, stuff that felt small in the moment, but piled up into a monthly payment that never seems to die. And at a 20% interest rate, that $9,000 costs about $1,800 a year in interest alone. $1,800 for nothing. No asset, no growth, no ownership. Just the privilege of being behind. Let me say that another way. Some people are fighting to earn 7 or 8% in the stock market while losing 20% to the bank. That is a financial tug of war you do not win. You cannot build wealth on a foundation of quicksand. And if you're carrying credit card balances month to month, paying them off is not a side quest. It is the mission. Before the fancy portfolio, before the stock picks, before the debates about which ETF is better, clean up the leak first. Now, here's the good news. And this is where the story turns. Because the bar for normal is so low, beating the average is actually much easier than people think. You do not need a 6-figure salary. You do not need a trust fund. You do not need to get lucky with crypto or pick the next hot stock. You just need to stop copying broke behavior. Here's how you start. First, save more than 6%. The average person saves around 6% of income. If you can get to 10% or 15%, you are already moving ahead of the crowd. Not overnight, but permanently. Second, live on $1,000 less than the average household. If the average household spends $5,500 a month and you can live well at $4,500, you just created $12,000 a year in breathing room. That is not small. That is life-changing. Third, use the boring secret that actually works: low-cost index funds. No drama, no guessing, no pretending you're smarter than the market every weekend, just consistency. If you invest the gap between what you earn and what you spend, and you do it month after month, year after year, you will put yourself in a completely different financial league from your peers. And fourth, stop normal spending. If you cannot pay cash for it, think twice before putting it on the card. Because normal spending feels harmless in the moment, but it steals options from your future self. And that's really what this is about. Options. The option to leave a job you hate, the option to handle an emergency without panic, the option to retire with dignity instead of fear. Most people never stop long enough to see where they really stand. The fact that you're here, listening to this, means you're already ahead of the curve. So don't let these numbers discourage you. Let them wake you up. If your net worth is low right now, that does not mean you were doomed. If your savings are behind, that does not mean the story is over. It just means there is work to do. And that work is worth it. Because you deserve better than spending your whole life trying to look successful. You deserve actual security. You deserve better than a retirement built on hope and government checks alone. You deserve peace of mind. A paid-off life feels different. A funded emergency account feels different. An investment account that keeps growing in the background feels different. That is what winning looks like. So remember this: normal is broke. Normal is stressed.
Normal is one unexpected bill away from chaos. You were not meant to chase normal. You were meant to outgrow it. The choice is yours.